Hello traders, Gary Wagner here. It is 1 o'clock in Honolulu, 6 o'clock in New York on Tuesday, 4th day of February 2025, and this is the evening report for gold and silver. Gold reached another historical peak in trading today, resulting in gold trading to a new all-time record high. Although dollar weakness contributed greatly to gold's rise today, it was primarily due to news on tariffs being imposed by President Trump. While Canada and Mexico received a 30-day grace period to negotiate tariff resolutions, China faced immediate implementation with new trade barriers. Beijing's response was swift, comprehensive, and immediate, announcing retaliatory tariffs on selected American imports. Ever since October, when the dollar index was sitting around 100, it gained significant value up until Monday, the 13th day of January, when the dollar index reached a peak at 110 and then dropped to 107. Strength returned up until yesterday, when the dollar opened at 109.45 but closed significantly lower at 108.505. Today, the dollar index opened slightly above yesterday's close but made a lower low, and by the close was below 108 at 107.98. Dollar weakness has aided gold's rise over the last 2 days. If the dollar continues its downward trajectory, there is no technical support until the low that was achieved on the 27th of January, right around 107, with major support not coming in till between 105.47 and 105.78. There is a 100% correlation between dollar strength or weakness and the rise or fall in gold. If the dollar continues to decline and does not find support until 107, that would be roughly a 1% decline in the dollar, which would mean that gold would increase by $28 per ounce. Before we add market sentiment, if the dollar falls to 105.48, that would be a decline of 2.76%, which would add $84 per ounce in terms of gold's value before we factor in market sentiment. If the dollar continues to decline and declines to 106.96, that alone would take gold above $2,900 to $2,903. If it falls even further to 105.45, that would take gold to $2,959. Of course, we would add additional value or subtract value based on market sentiment, and as long as President Trump continues to implement and impose tariffs on other countries, we can expect market sentiment for gold to be bullish and continue to get stronger. Lastly, there is another tool that we can use to forecast where gold prices could go, which becomes difficult because we are in uncharted territory and a market technician has no historical data to draw a reference. And that technique is to convert our standard candlestick chart to a Heikin-Ashi that very eloquently can give you a graphic illustration of the strength of a current trend. The primary technique is body size, and as you can see over the last 4 trading days, the body size has been extremely large, which means the trend has maintained at this current level since the end of last week. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.